You know what's wrong with most buy and sell signals? They give you entry points with no context about whether there's actual liquidity backing the move. You take the trade and price just dies. No follow through, no momentum. Just you sitting in a position going nowhere. And that's exactly why you need to see the most accurate buy and sell indicator I've tried. This tool doesn't just mark pivot highs and lows, hoping they'll work. It filters every pivot through a rolling volume profile, only promoting levels where significant trading actually occurred. What's even more impressive is how it uses delta coloring to show you net buyer versus seller dominance. In this video, I'm going to reveal this powerful indicator to you, show you exactly how volume profile filtering works, and give you a complete strategy with precise long and short entry rules. Let's get into it. To add this special indicator to your chart, first, head over to TradingView and pull up any chart you want. I'm using the 1 hour time frame on EURUSD, but this works on any market, any time frame. Click on indicators and type in volume profile plus pivot levels. Make sure you select the one by chart prime. Now, while traditional pivot tools just mark every swing high and low without checking if there's any liquidity at those levels, this one builds a rolling volume profile over your look back window, identifies the point of control, then cross-checks every raw pivot against the profile's volume bins. Let me show you what makes this indicator special. On the left side of your chart, you've got a smooth volume profile polyline showing the distribution of traded volume across price levels. This calculates exactly where the most trading activity occurred in your look back window. Inside that profile sits the point of control, marked with a horizontal line. This is the highest volume price level in the current window. But here's where it gets really powerful. You'll notice the profile changes color between teal and maroon. The indicator tracks up volume minus down volume across the entire period to compute net delta. So when the profile is teal, it means net buyers are in control. And when it's maroon, it means net sellers are dominating. Now, across your candles, you'll see these horizontal dotted lines called promoted pivot levels. But these aren't just any pivots. Each one had to pass a volume gate, as it had to land within its volume bin and meet or exceed a threshold percentage of point of control volume. And only pivots backed by real trading activity get promoted to chart levels. Now, each promoted level carries a compact label showing two critical numbers. 1, the bin's absolute volume, and 2, the percentage of POC volume. So at a glance, you know exactly how much liquidity is backing each zone. Most traders struggle because they rely on random signals without a clear system. That's why we focus on structured strategies and automation, so you can study how these tools work step by step without guesswork or emotions. If you want to learn more and see exactly how these strategies are applied in real market conditions, click the first link in the description. Now, to get even more accurate signals with this indicator, let's get your settings right. Double-click on the indicator to access the settings panel. You'll see the period setting, which controls the look back window for building the profile. It's set to 200 by default, and I've found that this works well for most time frames, as it captures enough data without including stale information. On lower time frames like 5 minute, you want to drop it to 150 for more reactive profiles. On higher time frames like daily, you want to bump it to 250 for steadier long-term structure. Next, you've got volume profile resolution, the number of bins between the window's high and low. It's set to 50 by default, which gives you good detail without overcomplicating the chart. Higher resolution means finer structure, but slower calculation. Once that's done, click OK. Now, let me show you exactly how to trade this indicator with precision. For perfect long entries, first, confirm bullish bias using the volume profile color. You want to see teal, which signals net buyers are in control, and confirm the delta is positive across your look back window. If the profile is maroon, skip long setups entirely because net sellers dominate here, which means you'll be fighting the liquidity flow. Next, you want to identify a promoted pivot low beneath current price. This shows as a dotted horizontal line extending to the right with a label showing volume and percentage of POC. You want this percentage to be at least 40% for high conviction setups. Anything lower might not have enough institutional backing. Now, after identifying the pivot, wait for price to pull away. This creates the setup for a retest. Once price comes back down and wicks into the pivot level without closing through it, you've got a clean reaction. This wick shows liquidity defended the zone. Enter long on the next candle after the rejection wick. Place your stop loss just below the pivot line. Target 1.5 times your risk or the next promoted pivot resistance above. For perfect short entries, first, confirm bearish bias with a maroon profile color, a sign that net sellers are in control. Never take shorts if the profile is teal, as you'd be fighting institutional buying pressure. Next, identify a promoted pivot high above current price with at least 40% of POC volume backing. Then, wait for price to gap away upward, creating distance from the level. When price rallies back and wicks into the pivot without closing above it, that's your bearish rejection signal. Enter short on the next candle. Place your stop loss just above the pivot line and target 1 1.5 times your risk. The beauty of this system is that you're only trading at levels where structure and liquidity overlap. Before I show you the next strategy, remember this: learning indicators is one thing, but applying them within a structured process is what really matters. That's exactly why we've created a place where you can review these strategies, see live examples, and study them in real market conditions. Just click the first link in the description whenever you're ready to explore further. Now, different markets require different volume profile settings for the best pivot filtering. For forex pairs, set period to 200 and filter percent to 25 to 30%. Forex has consistent volume patterns, so the higher filter threshold keeps only the strongest institutional levels. For crypto, drop period to 150 for faster adaptation to volatile moves. Lower filter percent to 15 to 20% because crypto volume is more fragmented across exchanges. Pay extra attention to promoted pivots that form during high volume periods. For stocks, use a period of 250 for daily swing trades, 180 for intraday. Keep the filter percent at the default 20% as stock volume is well distributed. For gold, set period to 200 but increase filter percent to 35 to 40%. Thanks for watching, and I'll see you in the next one.